The S&P 500 daily chart shows the Bollinger Band squeeze getting even tighter. It's less than 100 points, upper band 48.14, lower band 47.25. So it's getting tighter. There was a little bit of a breach under the lower band today, then a recover. So I'm going to zoom in here. Let's take a look at this mid-band. So we have to give the price action the benefit of the doubt before it breaks and closes under the lower Bollinger Band. This small dot here, which is the Bollinger Band mid-band for the 17th. So mid-band is actually at 4770.08. So we have the lower band 4725.83. So if it starts reaching the mid-band, gets close to getting up there near this, it's a good shorting opportunity. And then if it closes above it that day, you can jettison it. But if it stays under it, that'd be a pretty good short, and then just cover it when the mid-band gets breached to the upside by price. But we have to give this a few days. I said 5 days, so let's stick with that, see what happens. Now showing the upper Stark band, lower Stark band, channel 3 high and channel 3 low. Status quo from yesterday, so channel 3 high and upper Stark band pretty much together, and the lower Stark band and channel 3 low still pretty much together, the same place they were yesterday. It's the Bollinger Bands we're watching here. Now we're looking at lines, and for tomorrow, ongoing demand line 4736.35. Let's see if it just opens lower than this ongoing demand line and stays underneath it till end of day. Tomorrow on the 18th, it would probably be qualified. I don't believe it has to gap down below the low here, 47.1482. Let's just see what happens if it opens under the line, which should be pretty easy to do, and then closes under it. It could experience an open reverse break if it opens higher and then ticks higher than 4792.75. So somewhere right underneath the ongoing supply line here in the top of the range at 4795.50. So 4792.75, tick higher than that, and then turn around and close under the ongoing demand line. It will be qualified. And a straight up close above the ongoing supply line above that level, close end of day above there, and it will be qualified. And price did close below the 20 simple moving average in solid blue at that level and stayed above the 21 EMA at that level. So it's pretty close. 21 EMA held pretty good, but there was a breach under the both of them, Bollinger Band and the 21 EMA, but it recovered. Let's see what happens. And zoomed in further, it looks like it closed under the cloud conversion line too. So that's a bit ominous, and now it is between the cloud conversion line and the baseline down here, which is right on top of the lower Stark band. And price action experienced the flip to the buy setup count 1, so that was somewhat disheartening there, and we lost a sell setup count 6. So anytime it gets past 5, that's hard to take. And the arc level 0.618 was tagged, so I took that off and cleaned it up with some of the other ones, taking those off too. So the 0.764 arc level is at that level, 4584.38. And it looks like propulsion didn't wait to get down below the momentum down to print the momentum up for 50%. So not 100%, just the 50% propulsion momentum up at that level could get qualified with a close above that. And then if it gets qualified, and that could get tagged here, and that would end the exhaustion up for 50% really early, and at least it does not stop this 100% qualified and confirmed propulsion exhaustion up, so they will keep traveling along with price. And price action has had 2 lower highs, so 3 more in a row, and there could be a new swing point here where the 5C is at. It would shift over from the A and then point down, so we'll still be on a down swing point from here. It just shifts over, I believe. We'll have to wait and see what happens, but it's getting further and further away from having a swing point to the upside with these lower lows here happening. We need higher lows to get the swing point or have the line straighten out here. I'd rather see it happen here than have the swing point to the upside here, because then that means we'll be following the D wave down wave again. At least up here there's a chance to follow the up wave. So bottom line, zigzag is in limbo and looks like it will remain there for at least a few more days. And the S&P 500 weekly chart has lost the sequential sell countdown 13 as the close went back under the high 2 bars back. Now take it for granted that I use a stricter version requiring the close to be higher than the high 2 bars back, and the default to mark is the open. So if I had it set to open termination, then we'd still have that 13 here, but I'm using a stricter version of it, and that's so it will have a goal to the upside and then print the 13 in a decisive manner, and then it's time to look for the downside price action after that. But we could get some downside ensuing. We'll just have to watch that daily Bollinger Band. That's going to be key to everything. And it has until Friday. It's Wednesday now, so a couple more days. It could redeem itself and get a close above this high here, and then it will print the 13. So let's see what happens by Friday. 13 prints, then I'm going to be shorting a little bit more, and I already am.